joined right now by James Shugg. He is an economist at Westpac Banking Corp in London. Consensus is for 190,000 jobs to be added to the economy in March. James is with us now. He has a much more optimistic view. James, at 330,000, what are your reasons?
Well, firstly, good morning, Deirdre. I wouldn't say we're especially optimistic about the labour market. There's a couple of one-off factors that do lift our forecast. Our underlying expectation for the labour market is a reasonable enough 90,000 increase in employment in March. But on top of that, we're adding 100,000 for census workers, and that's based on what happened in the 2000 census, but factored higher for the fact that this time around, there's actually more census workers than being hired 10 years ago. And on top of that, we've got an estimate of 140,000 jobs that weren't captured in the February report because of the disruption from the snowstorms, but which will be added back in the March report. So it's 90 underlying, 100 for the census, and 140 for the weather, which adds up to a 330,000 jobs gain. But in an underlying sense, you know, we're certainly, I would say that we're not as optimistic as a 300-plus headline would make us sound out to be.
All right, James, but what about one of our reporters did a story on this earlier about how technology is replacing workers in many fields. What kind of data could we expect to see tomorrow that confirms that trend?
Well, I suppose we could look at the industry breakdown to try and perhaps draw some inferences related to that point. What I would say, though, is that our expectation that there's an underlying jobs increase coming through is actually based on some pretty decent surveys of the economy. The NFIB survey of small business, for example, is its intention to hire number, although it's still negative, it's the least negative it's been in the cycle. That is, the drag on payrolls growth from the small business sector is much less than it has been in prior months. Also, all of the business surveys, the regional business surveys that we've seen so far from the Fed, for example, even the Chicago PMI that we saw yesterday, all of them have had stronger jobs components. That's telling us that, regardless of your story earlier, that's telling us that the industrial sector is in fact putting on more employees, if in fact those surveys are right. So I think there is some reason for cautious optimism about the labour market at the moment. Well, as I say, the headline number that we're expecting will tend to overstate the element of optimism that you should be having.
James, where do you see the national figure then by this end? I mean, we've had some economists come on and say, you know what, it's still going to be around that 10% level. Do you think it will be higher or lower by the end of this year? At the end of this year, probably a little bit below 10%, but heading higher. In other words, we're going to see a lower unemployment rate over the next few months as the census worker effect really kicks in. But then once those census workers start to drop out of the numbers again, unemployment rate will tend to push a little bit higher. Also, we are somewhat gloomy on the US economy in the second half of this year. We're expecting growth to slow dramatically from the very strong pace we had at the end of 2009. And that will also be putting some upward pressure on the jobless rate. So possibly back up around 10%, but certainly heading higher towards the end of the year. James, we thank you so much for your time. James Shugg joining us there from Westpac from London.